I got an incredible email a couple of days ago from one of my clients, Ray. He's an ex-corporate banking client that gets really specific information, and he got a really good update from the Commonwealth Bank. So in today's video, I wanted to share 7 things that are occurring in the Australian economy at the moment that you need to be aware of, as well as a bit of good news and a bit of bad news. We're currently in a once in 100-year market. You know, the last time we had something like this happen at this level globally was the Spanish flu. So Commonwealth Bank starts their article from that perspective, that it is an extraordinary market and extraordinary times. And in Australia, in April and May, we lost almost 835,000 jobs, which is just insane and unprecedented. But it's not all bad news and not all doom and gloom. So Commonwealth Bank went on to say, in terms of what's next, that we're past the low point in the economy, which is very, very important information as an investor to understand moving forward. The recovery is happening a lot faster than they are expecting as well, which is positive news. There's still a huge amount of uncertainty in the marketplace though, and they're upgrading their forecast. And in their words, it's not as bad as they were expecting, and they've adjusted their forecast for the 3rd and 4th quarters of this year, as well as 2021, which I'll talk about later in the video. Now, the article goes into explain 7 different reasons or indicators that they've been following, or updates on the Australian economy as it stands now. Now, the first one is obviously an update on the virus, which, unless you've been sleeping under a rock, you're probably already completely aware of. They are proud, and so am I, of the way that the Australian government has handled it. Obviously, moving forward in the future, because we'll have a rule book on how to work in these types of markets moving forward and work with these types of illnesses on this type of level moving forward, we'll do better. But they're basically saying that Australia's done a good job, that the outbreaks are being better and better contained. Unfortunately, you guys in Victoria have had a huge flare up in the last couple of weeks, but hopefully the government steps in there and everybody does their best to sort of pull things back down. Now, the second thing, which is so important, because if you know anything about investing, we know that consumer confidence is what ultimately drives property prices. Sentiment and people feeling good and like they're going to make money in the market is such a big driver of capital gains, higher rent returns, better employment opportunities in the future. So consumer confidence is back to pre-COVID levels, according to the Commonwealth Bank. According to the Commonwealth Bank, there's been a huge rebound in sentiment in May and June. I also looked at the Westpac, is it a good time to buy index? And that's back to over 100%, which for a lot of people, it means that it feels like it's a good time to buy. And you're seeing that Australia-wide at the moment as more people rock up at auctions, more people list their properties for sale, and more buyers are active in the market. There's some suburbs that we're buying in Brisbane that 3 months ago, we were literally the only people in the market inspecting. And now there's 20, 30, 60 groups of people rocking through good quality properties again. So things are starting to turn. I'm not sure what's going on in other parts of Australia, but I have seen the auction clearance rates in Sydney and Melbourne starting to rise again. Obviously not back to January levels, but heading in a very positive direction again now. There's also been a fall in job security fears as well. You know, since February up until the middle end of June, people were very, very cautious. I'm very concerned about job security, but I'm noticing less and less of that, and obviously so is the Commonwealth Bank based on their indexes as well. Now, the third thing that's super important is spending has picked up a lot faster than anticipated. One of the beautiful things the government has done as a result of this virus is put money in the hands of people that they know are more likely to spend it. So there's another drop of money, some helicopter money coming out in the new financial year. Lots of money is being given to businesses, JobKeeper, JobSeeker. There's a huge coronavirus infrastructure plan in place. There's the construction booms now. There's all of the first home buyers grants being looked at. There's just so much money going out there flowing into the economy. There's the 60 or $70 billion of money that's been printed in Australia since the virus started, and the quantitative easing that they've started. There is the fact that interest rates are at their lowest level and look to hold those rates for at least the next 2 to 3 years. That's government backed. All of these things are very, very, very powerful, which has resulted in spending. And That's going to continue to occur now that people can continue to go out to shops and shopping centres and eat out in public again as well. Now, the virus, which is insane, and it's not so much the virus, but it's the way that the Australian government has addressed this. The fourth thing is that it's had a positive impact on household incomes. Now, you think about it, for a lot of people that were on Centrelink or some sort of government-backed incentive or pension, that the percentage or the amount of money that they're receiving from that has increased through this virus. There's also been the helicopter money dropped out as well. But on top of that, a lot of people, like I know people in retail, for example, that were working 1, maybe 2 days a fortnight, making a couple of $100 a week, that have been getting paid on JobKeeper, $750 a week, which is just insane. And I know a huge amount of people in the tourism industry that weren't earning big salaries, a heap of the people, uni students, etc., that weren't earning big salaries. All of the hospitality workers that are on JobKeeper have actually been earning more than they would have in their normal world. So that's huge. That's one of the results of the reason for the positive impact on household incomes. The other reason is obviously that people haven't been able to spend money. So people have been at home saving, they haven't been able to buy stuff, they haven't been able to spend money on alcohol, gambling or food. So people, according to Commonwealth Bank, have been saving a lot more than normal as well. And that's the fifth thing. Household savings are much higher than normal. I know in my position, in my family, I didn't realize I was spending $300 a week on eating out with the kids and my wife, and at lunch, and juices and acai bowls and all this stuff, coffees. But then, we've been saving a fortune since we haven't been able to do that. And so many other people are the same as well. The sixth thing is that the number of people receiving JobKeeper has gone to the highest point and is now starting to taper off and decline as well. Now that a bit of confidence and a bit of money starting to move around again, businesses are in better positions as well. So the number of people applying for JobKeeper, which is a result of the number of people being laid off, is now starting to decline. And that's why we saw in April and May the highest number of people that were laid off during those periods, and now people are starting to get back into some form of work again as well. The seventh thing, which is so important to me, is that house prices have not fallen much. Now, this is really fascinating because there are so many people speculating that Sydney prices, Melbourne prices were going to crash because they'd gone up so much, that prices around Australia, and Commonwealth Bank back in March, when they did their original forecast, thought that house prices in the next 6 months were going to come down by as much as 10% Australia-wide. But that hasn't materialized, because what they didn't forecast was the fact that even though there was a much lower number of buyers, including immigrants, students, Australians and investors, there was also a much lower number of sellers as well. So as that demand declined, the stock on market declined by as much as 40 to 80% in some markets. And we've noticed it up here. Thank God we get so many of our properties off market, and we've got these agents that are prepared to constantly bring them to us. But we've noticed on realestate.com that the number of people putting properties online has declined. Now, what's super interesting is I work with a couple, Marcus and Tammy, who work at realestate.com.au, and they've noticed that the number of people searching properties in the month of June is the highest number on record since that company started. So plenty of people with confidence are starting to look. So many people at home. I don't know about you guys, but I've reflected so much over the last 4 months when I'd normally just be busy living my life, and I've decided that I want to work in a more strategic way towards financial freedom. I want to have a better work-life balance. I want to look after my health better, and I want to set myself up. And there's so many other people out there as well, which are being reflected in the number of searches on realestate.com being at an absolute all-time high at the moment. Now, obviously Commonwealth Bank goes on from there, like all good people in the industry should do, and say there's plenty of downside risk in this current market as well. There's obviously concerns about a second wave of the virus. There's the fact that we haven't had the 300,000 or 400,000 people that should have came to Australia this year in terms of the net overseas migration come in. We've also lost all of the international tourists at the moment, and we've lost all of the international students. So that's going to have a big impact on things. I've been doing some research using SQM's data, and vacancy rates, particularly in Sydney and Melbourne, have gone through the roof as a result of those things. Vacancy rates here in Brisbane, in the suburbs we buy in, are still sitting at well below 2.5%, and in most instances below 1.5%. So, if you're buying Sydney and Melbourne, just be aware that vacancy is a bit higher at the moment, and that your product could sit vacant there for maybe 4 or 6 weeks, 8 weeks before you find a tenant. In Brisbane, if you're pricing realistically in most of the good suburbs, we're not talking about crappy inner city unit stuff, we're talking about quality blue chip or close to the beach, close to the CBD, and good mum and dad suburb stuff looks okay. Obviously, the number of students has declined rapidly, which is another thing that they see as part of the downside risk. And then something that so many people have been talking about at the moment is the fact that the stimulus will be starting to come to a decline in September. Now, through the grapevine, and I do hear things that other people may not hear, is that we only spent, out of the $130 billion that was attributed to JobKeeper, the government's only spent about $70 billion. So they're talking already about another 6 months of JobKeeper for certain people in certain industries to spend that extra $50 billion that they still have up their sleeve if required. I've also heard a heap of people talking at the moment about waiting till September once the bank holidays end. I've been hearing some of the major banks already suggesting that they would be open to a conversation with the government about extending the bank holiday from 6 months to 12 months. So the government has done an incredible job supporting us at the moment. It's obviously meant that our economy is now in a lot more debt than expected, but I've heard a lot of things about them just printing more and more money to sort of offset some of that debt, to drive some inflation, to reduce the long-term effect of that debt. Obviously, with mining starting to kick off again, I believe there's going to be a global tourism boom and education boom after this is over as well, as so many people around the world see Australia as a good destination, a safe destination based on how well we've responded to the virus, and a safe destination from a government perspective in terms of a place to put money. But, that's a down the line risk. We've got to see what happens. Personally, I'm not too concerned about it. I'm still looking to buy a property at the moment. A lot of the investors that I follow, like Ray Dalio, say that if it's in the news, it's already in the price of the market. And I believe I've been seeing that. We've been able for the last 3-4 months to buy properties at ridiculous prices, but those really cheap prices don't seem to be available anymore. It's more back to where it was in January or February before this now. So we've seen the dip. There were properties that we're able to buy for 5, 10, 15% cheaper. Now we're through the dip. It's back to just being a great market that's at the bottom of a 12-year low according to CoreLogic. Obviously, they go on to say that things are changing quickly, but what they're noticing is that things are moving in the right direction and a positive direction. The contraction has not been anywhere near as large as they expected, and that money is to remain cheap. Now, when you think about it, with cheap money, the cheapest in Australian history, and that cheap money is due to stay around with such massive government infrastructure and construction orientated spending and stimulus, with helicopter money being dropped out, with government stimulus or saviour packages around at the moment, with the fact that all markets in Australia outside of Hobart, Sydney and Melbourne and Canberra, if you look at Darwin, if you look at Perth, if you look at Brisbane, those markets really haven't grown in value for 7 to 13 years, depending on which one of them you look at. So there's some incredible areas outside of Sydney, Melbourne, Canberra and Hobart that haven't received the crazy growth that those markets have. This cheap money, this stimulus, this printing of money, the fact that the government's got a really aggressive policy, the fact that over the next 5 to 7 years, we're going to see money being much easier to access, as well as a global infrastructure boom. I believe personally it's going to be the biggest infrastructure and construction boom in human history. And because Australia's sitting on so many incredible resources, the coal, our iron and our gas will be shipped out all the way through the world, which is going to help us pay off this debt much, much faster as the government raises money. So I'm very, very confident about the future. Obviously, there's downside risk. As Commonwealth Bank talked about, but as an investor that's looking to buy for the next 15 to 40 years, you know, these markets represent just a blip in the cycle. And, you know, I'm really proud to be an Australian at this stage. I think that the Australian government has handled it well. I'm really grateful for all of those people that have been coming to us since the virus started. Over the last 4 months, I think 50 new people almost have signed up with our business. 35 to 40 of them have been able to continue to buy property. So there's so many people, and I'm so proud of you for being able to do what I talked about last year and the year before when I told you online that this was coming in 2020. Not the virus, but this type of market where stocks were going to decline and prices of property may have declined or just gone flat for a while and sentiment was going to be really bad. Have been able to sit there and not run away from the market, not run into the market in a stupid way, but have been able to put together a sensible plan, be patient, and strategically pick off a great property. And I believe over the next 3 to 5 years, there's going to be such an incredible opportunity up here in Southeast Queensland. You look at the population growth, the infrastructure growth, it's crazy. So appreciate it, guys. Big ramble, big data drop today. Please subscribe to the YouTube channel if you haven't already. Please share this with someone who's still freaking out or someone that needs to hear this to get their confidence back. This Commonwealth Bank's update, not mine. You know, please reach out to us if you're seriously thinking about buying a property in the next 3, 6 or 12 months in Southeast Queensland and you'd like to talk to us about where the market's at, where it could potentially go based on CoreLogic, SQM, Heron Todd White, CBA's updates. We'd love the opportunity to learn more about where you are and where you see yourself in the future and see if we can't help you move into the market with a bit more confidence and a bit more security than you would without our support. We wish you all the best, guys, and as always, stay safe. Cheers.